Hello traders, Gary Wagner here. It is 11:40 in Honolulu, 4:40 in New York on Friday. Happy Aloha Friday as we say on the islands. It is the 10th day of January 2025 and this is the evening report for gold and silver, our weekend review. Today, the Labor Department's jobs report showed December non-farm payrolls increased by 256,000, substantially exceeding Reuters' consensus forecast of 160,000 and surpassing November's revised figures of 227,000. The financial markets experienced significant volatility as both gold and silver demonstrated remarkable resistance, defying initial reactions to the report. Despite an initial sell-off, both assets closed higher, challenging conventional market expectations. The dollar originally traded around 109.37 on the open and prior to the report traded to a low of 109.089. Immediately following the report, the dollar moved sharply higher to initially 109.67, settling at 109.647. Gold also reacted in a similar manner, trading to a low of 26.86 prior to the report, and then within an hour after the report, jumping to highs at around 27.28 with an intraday high of 27.35 before settling at 27.17. Over this week, we have presented different models of how we believed this correction would unfold. Initially, I was looking at this as A, B, C, D, E, with one final correction down. However, because gold was trading so strongly throughout the week, I presented a different scenario in which we would see the A, B, C, but that would conclude the correction, and rather than there being a D and an E, starting the count with a primary first wave, breaking above the long-standing resistance line that we identified weeks ago. That is exactly what we saw today, with gold closing above the resistance line. A move next week that shows follow-through buying would definitely confirm that we are now looking at a wave one, and we have restarted the clock, so to speak, with our motive phase with this primary first wave. On yesterday's show, I spoke about the fact that I believed that gold could touch $3,000 per ounce by the middle of this year. However, if this model is correct and we have entered a new motive phase, we would be in wave one, our benchmark wave, and as such is difficult, if possible at all, to predict how high this benchmark wave could go. Therefore, we will need more information to speculate where wave one could conclude. First, we need to see follow-through buying on Monday to give us a hard confirmation that in fact we have entered an impulse phase.
Silver had a stellar week, gaining almost 4% this week, or $1.20 in value. Last week, we discussed how silver seemed to be poising itself for a pivot, and that was primarily based on the small candle size for that week and the prior week. Indeed, we did get a pivot and a dramatic move to the upside, and I believe that this move higher has just begun. So as far as our wave count is concerned, last week we did in fact conclude our A, B, C correction. It appears as though our next motive phase or wave count will be a bullish one. However, we cannot be certain of that until we either break above 32.80, which is the top of our B wave, and it would likely be a bearish count if we break below, call it 29.25, which is the conclusion of our C wave. Switching over to a daily time frame, we can see that silver has had 7 consecutive green candles since we concluded our corrective phase. In this shorter time frame, however, we may have seen temporary resistance at today's high. Let's throw in our Ichimoku cloud, and this is why we may have temporary resistance here. As you can see, the high just made it to the bottom of our Kumo. Now, the Ichimoku cloud tells us different things in different time frames. For instance, if we go to a 4-hour chart, it is extremely bullish. A very interesting aspect of our Ichimoku overlined with our wave count in a 4-hour time frame. For every wave to the upside, such as this wave 1, the candles had broken above the clouds and stayed above the clouds for most of that wave. In our wave 2, for instance, we did the exact opposite. In our 3rd wave, we again spent most of our time above the clouds. In our 4th wave, we spent most of our time beneath the clouds. And same for our 5th wave, and our A, our B, and our C. So in every wave headed up, we crossed above the clouds, and in every wave headed down, we crossed beneath them. Now, in our benchmark wave, we have broken clearly above the clouds once again and seem to be going higher still. That gives me further confidence that this wave count coming up will be a bullish one. If we look at a longer time frame with our Ichimoku cloud, we will see how silver has been above the clouds ever since it broke above $27. We tested the top of our Kumu last week, but it acted as support, and once again we are above our cloud formation with a very thick green cloud representing that the trend is bullish and has strength. I believe the rally in silver has just begun and will continue into the coming weeks.
This has been Gary Wagner,
And Joseph Wagner.
wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.